Hi guys, welcome back to High Yield Intraday Trading. So the previous trading session was quite choppy, isn't it? But we always have the way out to make money in choppiness as well. Anyways, let's leave it aside. So today we are gonna discuss about a strategy that has become very famous because of the fact that it can fetch us quick money. Okay, but we always need to remember that the things that can fetch us with quick money can also be the things that can quickly take away the money from us. Okay, so having that said, the strategy I am talking about is ORB, that is the opening range breakout. Now what is ORB? ORB is nothing but a range breakout that happens at the opening of the market. Now when I say opening of the market, I do not mean 9:15 a.m. Okay, now since we are talking about the range breakout, we need to allow the market to form a range. Now different people make use of different ranges. When I say a range, it means the high and low of the move that a particular stock makes. Okay, so some people consider the breakout range to be 5 minutes, some consider it to be 15 minutes, some 30 minutes, and even some people consider it as 1 hour. Okay, so when it comes to me personally, I trust more on the 30 minutes range, because if I take any time lower than this, then the volatility will be very high. Okay, and if I take any time higher than this, then the volatility might fade off, it might die off. Okay, so I feel 30 minutes works good for me. Okay, now one important thing to note here is this strategy, the ORB strategy, should not be followed for stocks which has given huge gap ups or huge gap downs. Okay, now coming to the rules, the idea is to go long on a break above resistance and to go short on a break below support. Okay, now this is not as simple as it sounds. Okay, now there are many other factors that needs to be taken care of. Like, first, we need to be sure that the breakout is real and not a fake one. Now how do we get sure about this? The answer is again volume. Okay, now when we talk about volume, the volume can contribute in both the ways, right? It can take the stock prices up, at the same time it can bring it down as well. Okay, so when we talk about volume for ORB strategy, we need to consider the right volume and just not the volume on a generic basis. Okay, now if we want to trade on a break above resistance, okay, then we need to make sure that we see heavy buying coming into the market rather than heavy selling. Similarly, if we want to trade on a break below support, then we need to make sure that we see some heavy sellings coming into the market rather than heavy buyings. Okay, so this is something that is very important and we need to have an eye on it. Okay, so basically the summary is the price action and the volume should be in sync. Okay, now having that said, let me take you to the charts and show you what exactly do I mean. Okay, that will be more clear to you people. Now this is an example of Tech M. So we will take the example of two IT companies. One is Tech Mahindra and the other one is Infosys. Okay, now first thing first, we are considering the example of a 30 minutes range. Okay, so what will be the range here? That will be the lower of the day. Okay, the low of the day, and 1 2 3 4 5 6, and the high of the price of the stock in the first 30 minutes. Okay, so the thing that you see here, the upper yellow line and the below yellow line, this is the range for the first 30 minutes. Okay, now coming to how do we trade this. Okay, now if we want to go long, we need to make sure that this yellow line, which is acting as a resistance, is broken. Okay, so in this case, this green candle has broken the resistance. Okay, and it has closed above it, hence I will go long from this point. Okay, and you see what's happening after that. It's running all the way up. Okay, now why we tell that, like why did I mention earlier that it fetches us some with some quick money? It's because we cannot be really sure that this is the point till when Techem will come and then it will fall after that, right? So what normally people do is, once the breakout happens, okay, they enter the trade, and depending on the stock price, okay, they exit the trade. Now for example, here this is a 400 rupees stock. Okay, now let's say for example I entered at 405, let's say for example, okay, 405. So I will not wait till it reaches 413, right? Because I don't know till what point it's gonna go up and from which point it is gonna go down, right? Now what I'll do is I will enter at 405, and since it is a 400 rupees stock, I expect at least a 2 to 3 rupees or 3 to 4 rupees movement in this. So the moment the stock reaches 408 or 408.5, I will go ahead and exit the trade. Okay, that would be something which we can call as a handsome profit in a day trading, in an intraday trading. Okay, a 400 rupees stock giving a 3 to 4 rupees movement in your expected direction should be more than enough for you for the day. Okay, so that is the whole reason why we consider it to be a strategy that can help us in earning quick money. Okay, now this is the resistance which we got. Okay, and since this was broken, we went long. At the same time, what we need to take care, what we need to see as well as is the volume. Okay, as you can see here, the volume is increasing all the time. Okay, now this is a red candle which actually can scare you. Okay, because you have just entered the trade. Okay, now if you see the volume here, the volume was not huge at all. Okay, the red block that you see here, that is not huge at all. Okay, so that was the only red block that formed, and then again the volume started increasing and went all the way higher. Okay, so this was the right volume thing that I was talking about earlier. Okay, that is, we need to take care of the fact that we are getting the right volume rather than the volume on a generic basis. So the volume that we see here is the buying volume, okay, not the selling volume. Similarly here also the volume that we see is the buying volume. Okay, so this is one example, guys. Now let's go to Infy. Now obviously I have chosen the stocks according to the graph it has formed. Okay, so this is not a live session, the market is already done, so I have to take the example of things which match the criteria. Okay, but in live markets it's again the rules has to be the same. Okay, and we need to trade accordingly. Okay, now in Infosys what happened is, again 30 minutes is the range that we are talking about, right? So 1 2 3 4 5 6, so this, oh, where's the trend line? Okay, just a moment, let me draw it. So this is the resistance we are talking about. Okay, and the range will be starting from here. Okay, this is the lower yellow line, this is the upper yellow line, so the difference between these two lines is the range that is being formed in the first 30 minutes. Okay, so what do we do here? Now we enter long when, according to the rules, we enter long when this resistance is broken and the candlestick closes above it. Okay, now you can see here on at around 9:50 a.m. this is the green candle, okay, which is closing above the resistance. But is it sustaining it? The initial answer will be no, right? Because after that it moved down for a while. Okay, but after some time again we got a green candle which closed above the resistance, and after that this was the movement that it gave. Okay, now how do we decide that this was a false breakout or not? Again, if you remember what I said earlier, volume is the answer, right? So we need to see when this red candle started forming. Okay, we need to see what is the kind of volume that the sellers are generating. If you have a look at here, okay, starting from here to here, these are the volume that the buyers have generated. Okay, now if you compare the volume that the sellers are generating, it is very, very low. Okay, it is very low as compared to the volume that the buyers are producing. Okay, so from this we can decide to stay back in the trade. Okay, and when the volume when this green candle formed, the 1025 green candle, after that there was no looking back and it just went up. Okay, so this was the exact volume thing that I was talking about. We need to take care of the right volume. Okay, if we are going long, if we are concentrating on the breakout that is happening on the resistance levels, we need to concentrate on the volume that the buyers are generating. Okay, and if you face any situation like this, then always concentrate or always cross check the kind of volume that the sellers are generating. If it is low, you can decide to stay back in the trade, and once you get such movements, okay, now for a 980 rupees stock or 990 rupees stock, you can easily expect a movement of around 6 to 7 rupees. Okay, so once, let's take it as 5 rupees. Okay, now once you have a profit of 5 rupees in your hand, please lock your profits and come out of the trade. Okay, now so this is how it works, guys. Okay, now also note that here in this video we have just talked about volumes, okay, to cross verify if the breakout is valid or not, but that is not the only thing we have. That is not the only thing that we have. Okay, we have a lot of other things that has to be considered, and those are something that I cover in my technical training. Okay, but if also you use just the volume thing that I have discussed here, you should be in a good situation to make some quick profits. Okay, but make sure that you lock your profits at the earliest. Okay, so that's it for now, guys. I believe this will surely help you guys in making some good profitable trades out there. Okay, and as always, I insist backtest this first, okay, and then implement it in the live market. Okay, so this is what I have it all for today, guys. Please go ahead, like and subscribe my YouTube channel. Okay, and also do join us in our Discord channel, as we always have something interesting going on over there. You can go to my website, that is www.highyieldtradings.com, and click on the Discord icon and fill in the details. That will shoot out a mail to my team. Okay, and then we will do the needful. All right, so that's it for now, guys. Thank you all for your time. See you. Bye bye.